Good afternoon, welcome to Market Wrap number 205. Stuart Williamson here at the helm. And this week, as we journey to find the truth in residential markets in the UK, I've been fielding some questions from clients, so I thought it might be useful to share. First question I have is, are interest rates really going to hit 8%? A client in Singapore had read the report from Jamie Dimon, who's the head of JP Chase, that interest rates in the US could well hit 8%. And his comment was, if that's the case in the US, what's to stop it happening in the UK? Well, as you know, central banks around the world have been increasing interest rates over the last couple of years to try and combat inflation, and the US has been doing that. It's now standing at about 5.5%, which is the highest it's been for 20 years, so higher than the UK. Mr. Dimon's comment, the head of JP Morgan, he said there has been a very broad range of 2 to 8% or even higher, potentially pushed up by high government spending and the need to combat price rises. All the following factors appear to be inflationary: ongoing fiscal spending, remilitarization of the world, restructuring of global trade, capital needs of the new green economy, and possibly higher energy costs. So what do we have in the UK that's different to that? Well, we don't have anything really, but the difference you have between the UK and the US is the type of mortgage lending. In the US, you take a mortgage out, it's fixed for 30 years, 4% or the like. Whereas in the UK, no one fixes mortgages really longer than perhaps 10 years. And they're variable rates as well. So the mortgage market in the UK is a lot more susceptible to interest rate changes. So hence, when the Bank of England cracks down in the UK, it really does have an effect, which is a lot different from the US. So no, I don't believe we are going to see high interest rates like that, even if they come in the US. And it won't be a case of, as they say, if the US sneezes, the UK catches a cold. So a second question we had was, why are mortgage rates going up at the moment instead of down? Because that's what we're seeing. If you remember back to January this year, there was all the celebration and hoo-ha, and I was on that train saying how great it was that interest rates were starting to come down, inflation was coming down, and that should happen for the rest of the year, when in reality they've edged back up. So why has that been occurring when the Bank of England seems to have things more under control? Well, basically, borrowing has got more expensive. Uncertainty as to what's going to happen means that banks tend to be more conservative, and so they try and hedge their bets against what might happen in the mortgage market. Consequently, they have been moving up a little bit. It's not a great deal. On an average mortgage, it's about an extra 5% cost, but they still are going up. Also, at the beginning of the year, a lot of lenders were involved in a mini price war. They're all out trying to outdo each other as to who could be the most forward-looking, and that's now fizzled out, and a bit of the sort of enthusiasm in the market has gone. So consequently, there are less deals out there, and whereas rates at the beginning of the year were 5.55% for a 2-year fix, they've now gone up to 5.93, which is a wee bit more expensive, and as I said, it's about £100 extra when it comes to a mortgage of that level. The global economic outlook is not as good as it was. What's happened in Israel with the Hamas situation has had quite a negative effect on, as Mr. Diamond said, about global rearming and the like. So confidence has been knocked a bit. Lenders tend to move in a pack, so one doesn't want to do something that the others aren't doing. They don't want to be caught out. As you say with stock markets, 75% of all stock market active investors don't outperform the index. That's because they all try and follow the index and they can't second guess it. And finally, what the Bank of England says has had a big effect. They were being very negative up until the last Monetary Policy Committee meeting. This last one was 7-2 in favour of not cutting, which is the strongest it's been from a positive perspective since the beginning of the year. So people take a listen to that and they make decisions based on what they think might happen. So consequently, that's why we're seeing interest rates going up a little bit at the moment. But as we saw from the comments last week at the Monetary Policy Committee meeting, they expect to cut 3 times this year, and Andrew Bailey has said that. So that's a lot more positive, so I don't think we'll see that going on. Now finally, talking about positive market sentiment again, some great news came out of the UK, and I quote, "UK exits recession with fastest growth in 2 years. The economy grew by 0.6% between January and March, the fastest rate for 2 years." Okay. Went into recession at the end of last year, and it was in recession for 3 months in a row, a technical recession. But now it's out of it, and it's great to see that happening. Rishi Sunak has been taking all the appreciation, of course, and says that the economy has turned a corner. But the Labour Party's comment was, it's no time for a victory lap, because we're not actually out of the woods yet. Andrew Bailey again told the BBC that the economy is looking a lot more positive, and interest rates were more rather than less likely. So that's a very positive thing. So market sentiment, which is what what it's all about in the UK property market is looking a lot more positive and good for the year. One of the other supporting factors is basically what has been creating this positive outlook in the UK economic situation. There's been a growth in services, there's been growth in credit card spending, and a growth in the amount of borrowing that lenders are giving out to mortgagees. So those three things are putting more money into the economy, which is making expansion more likely than recession. So we've got a different situation perhaps to what we have in the US, so we shouldn't be seeing higher interest rates. They should fall. We've got the country coming out of recession, which is very positive, and interest rates should be falling. Again, that's all positive stuff, and I'm bound to be positive because that's what I do for a living. I work in property. But it is one of the better configurations of situations that we've seen for quite a while, and certainly that has been reflected in the activity in the UK property market. It's very, very positive. So thanks for listening. Market Wrap 205, do like, subscribe, and send in as many questions as you can, because it's always good to be tested, and we'll be answering any questions individually. Thank you very much.